It sounds to me like you are more worried about inflation than recession.
No, I think either one can cause a lot of trouble, and recessions can turn into depressions. I mean,
Warren Buffett's warning for crisis. Warren Buffett's strong warnings and actions shake up financial markets at Berkshire Hathaway's yearly shareholder meeting. Buffett made some bold predictions about the economy that caught everyone's attention. What predictions did he make? Did his predictions make everyone worried? Why do people believe in his predictions? We are going to discuss all of this in this video. So without any delay, let's get started. Warren Buffett has earned the nickname Oracle of Omaha for good reason, as his exceptional understanding of the investment landscape and the U.S. economy has consistently led to his immense wealth. However, Buffett is now issuing a gloomy prediction for investors. The prosperous times are about to come to a close. During Berkshire Hathaway's annual shareholders meeting, Warren Buffett informed the attendees that the remarkable era for the U.S. economy is reaching its conclusion. Moreover, Buffett expressed concerns about potential downturn and reduced earnings in the majority of their businesses, primarily due to the current state of the U.S. economy. The majority of our businesses will actually report lower earnings this year than last year. These concerns are further amplified by an impending banking crisis, which has already resulted in the downfall of several significant financial institutions. Berkshire Hathaway possesses a wide array of businesses, such as Geico, See's Candies, and the BNSF Railway. Its operations span across multiple industries including insurance, energy, real estate, railroads, manufacturing, retail, and services. Given the extensive scale and diverse scope of its activities, investors consider Berkshire Hathaway to be a reflection of the overall U.S. economy. Buffett highlighted that many of Berkshire's businesses have done well in the past few years. They benefited from low interest rates and the government injecting money into the economy to counter the impact of the COVID-19 pandemic. However, Buffett stated that this period of favorable conditions has ended. He mentioned that the current situation is now different compared to 6 months ago, indicating a change in the overall economic climate. Buffett, as reported by Seeking Alpha, stated, "If anyone believes that deposits are no longer loyal, they are mistaken and living in a different era." In the past 14 months, the Federal Reserve has raised interest rates from almost zero to levels exceeding 5%. This action aims to address significant inflation. Higher interest rates tend to promote saving rather than spending and increase borrowing costs, ultimately reducing demand, lowering asset prices, and increasing the likelihood of a recession. Furthermore, the heightened interest rates have created challenges for banks as the value of their fixed income investments has decreased. This situation has also led depositors to withdraw their funds and invest them in bonds and money market funds with higher yields instead. These factors have contributed to the ongoing problems in the banking industry. In March, both Silicon Valley Bank and Signature Bank experienced failures, and more recently, JP Morgan acquired the struggling First Republic Bank. Buffett stressed that higher interest rates have some positive implications for Berkshire. He mentioned that the company is expected to earn approximately $5 billion this year from its cash, treasuries, and other short-term investments, which is a significant increase compared to around $50 million earned just a few years ago. Buffett, known for his proactive investment strategies, is aligning his actions with his beliefs. Recent trades made by Berkshire Hathaway indicate this. In the first quarter of 2023, the company sold shares worth $13.3 billion while only purchasing $2.9 billion in equities. Berkshire Hathaway, the company led by Buffett, decided to reduce its ownership in Chevron by 28% to $21.6 billion, even though Chevron's stock price only went down by 9%. This move was reported by Reuters. Despite this change, Berkshire Hathaway saw a positive outcome in the quarter with its operating profit increasing by 13% to $8.07 billion. Buffett warned that fear is contagious among people. He said that consumers' strong worries about the safety of their banks are making it difficult to respond to the crisis effectively. The billionaire investor responded to a question stating that if you have people worried about their money in the bank, you can't run an economy. Here we are in 2023, and you actually see the FDIC pay off 100 cents on the dollar to everybody, and still you have people worried. And that just shouldn't happen, he said. The messaging has been very poor. It's been poor by the agency and poor by the press. The billionaire investor, who is known for being very optimistic about America even when others are pessimistic, didn't directly answer whether the banking system could fail. It shouldn't. I don't think it will, but it could. And the incentives in bank regulation are so messed up, and so many people have an interest in having them messed up, it's totally crazy. The ease and ability to transfer money in the digital era is also making it harder for officials to get ahead of the crisis, he said. That's the world we live in. A lighted match can turn into a conflagration, or it can be blown out, Buffett added. That's all. These predictions made by Warren Buffett have had a significant impact on the United States. What are your thoughts on these predictions? Do you believe they are cause for concern? Please share your thoughts in the comments section below.